Hey everyone, welcome back to Corporate Decoder, where we peel back the layers of corporate filings to uncover the real story. And sometimes that story is about giving you more money. Today we are diving into Metropolitan Bank Holding Corp. Their latest report from the 16th of January 2026 dropped some interesting news about their dividend. Before we dive in, if you want more of these plain English breakdowns of important financial documents, make sure you hit that subscribe button. And if you want to chat about these findings with other finance enthusiasts, join our Discord community. The link is in the description below. So, what is the big news here? This is a current report, basically a heads up to investors about something significant happening with the company. In this case, the main event is happening in item 8.01 other events. Alright, let's get straight to it. Metropolitan Bank Holding Corp, or MCB as you might see it on the stock market, announced a dividend increase. They're giving shareholders 20 cents per share, which is a nice jump from the previous 15 cents. That is a 33% increase, which is pretty solid. This means if you own shares of MCB, you are going to be getting more cash back in your pocket. The dividend is set to be paid out on the 6th of February to anyone who owns the stock by the 27th of January. Now, why is this important for investors, especially those who rely on dividend income? This is a positive signal. It suggests that the company is doing well enough to not only maintain its dividend, but to increase it. This often reflects a company's confidence in its future earnings and its ability to generate consistent cash flow. Think of it like a company saying, hey, we're making good money and we want to share some of that success with you, our owners. Metropolitan Bank Holding Corp is a financial institution based in New York. They operate as a bank holding company, meaning they oversee and control other financial entities. In their case, typically Metropolitan Commercial Bank. They are publicly traded on the New York Stock Exchange under the ticker symbol MAXIB. This dividend announcement is a key piece of information that investors look at to gauge a company's financial health and its commitment to returning value to shareholders. An increase in dividends can also attract new investors who are looking for income-generating stocks. The dividend is declared on their common stock. This is the standard stock that most people own when they invest in a company. It represents ownership and usually comes with voting rights, unlike preferred stock. While we're not going to dwell on administrative details, it is worth noting their headquarters are in prime New York City real estate. This is a brief nod to their central location in a major financial hub. And as we look through this filing, we see the standard inclusion of exhibits. This report is accompanied by a press release. This is usually where the company elaborates further on the news they are announcing to the public. It often contains more details about the dividend itself and potentially some commentary from the management about the company's performance and outlook. Since we're focusing on the core information from the filing, the dividend announcement is the star of the show here. They also include interactive data files. This is for regulatory purposes, making the financial information more accessible and searchable for analysts and investors looking to crunch the numbers. Okay, let's put on our Warren Buffett hats and analyze this. A dividend increase is generally a very good sign. It signals that Metropolitan Bank Holding Corp is profitable and flush with cash. This isn't just a small tweak, a 33% increase is a substantial move. It suggests the board and management are quite optimistic about the bank's current financial standing and its future prospects. They would not be increasing dividends if they thought earnings were going to drop significantly, or if they saw major risks on the horizon without a solid plan to manage them. This move also positions MCB attractively for income-focused investors in a market where stable income is always sought after. A growing dividend can be a powerful draw. It implies good management that is prioritizing shareholder returns. However, we also need to be a bit cautious. While this is great news, we don't have the full financial picture from this specific filing. An 8K is for material events, and a dividend increase is definitely material. But to truly understand the sustainability of this dividend, we would ideally want to look at their latest quarterly earnings report or annual report, which would break down their revenue, expenses, profitability, and balance sheet in detail. Are they earning enough to cover this increased dividend comfortably? What is their capital position like? Are there any significant risks lurking that could jeopardize future payouts? For instance, if the broader economic environment starts to sour, banks can face challenges like increased loan defaults, which could impact profitability and their ability to pay dividends. In conclusion, the 16th of January 2026 filing from Metropolitan Bank Holding Corp is a clear positive for shareholders. The declaration of an increased quarterly cash dividend demonstrates financial strength and management confidence. It is a smart move to reward existing investors and attract new ones. The key going forward will be to watch how the company's underlying financial performance supports this increased payout. What is your take on this dividend hike? Do you think it signals a strong future for MCB, or are there other factors we should be watching closely? Let me know your thoughts in the comments below. If you found this analysis helpful, please give this video a thumbs up, and don't forget to subscribe for more corporate deep dives. And if you are looking to connect with other smart investors and discuss these filings, join our Discord community. The link is in the description. Thanks for watching, and I'll see you in the next Decode.